All right. Welcome to today's podcast. Thanks for joining me as always. I really appreciate you as audience members and hopefully getting some value out of this. And I'm always looking for great people to bring in here and share their experiences, their wisdom, and sort of their view on investing and life in general. So today, I really was looking forward to this conversation. Today, I'm joined by Beau Turner, who's the founder of Abundant Mines, Mines. And it's a Bitcoin mining firm that helps investors get into the game of coin mining and benefit from the passive income that it could generate without having to get in on the technical sort of details of it. So, Beau, really appreciate you joining me and welcome.
Thanks for having me on, Tom. Really looking forward to this.
Yeah, no, we were chatting before we got rolling here. Like this is, for the world we live in virtually that, Beau being in Oregon, me being in Connecticut, we can talk here just like we were hanging out at the coffee shop. So I really appreciate these sort of opportunities. So Beau, before we get into the nitty gritty of crypto and all these things, I'd love for you to share a little bit about your journey around, you're a young guy, younger than me for sure. Kind of your experience kind of in the investing world, because it didn't start with Bitcoin, right? Or crypto.
Yeah, absolutely. Well, it started, I would say, pretty young. I was really interested in wealth building, even as kind of a middle school, high school student, looking at stock portfolios and different asset classes. My family pretty early on taught me the value of sound money, gold, and all of these things that I don't think are necessarily a standard part of childhoods, but I was thinking about investing pretty early and then went to college for engineering. I got an engineering management and information systems degree, decided I had no interest in being an engineer at somebody else's firm. I would much rather own my own business, but didn't really know how to start an engineering focused business. I didn't have that perfect unicorn startup idea right out of college. So I got into real estate investing and started building a single family rental portfolio, commercial portfolio, and just doing deals around the Dallas-Fort Worth Metroplex and across the Southeast, where we were finding different ways to take down deals creatively and just make the most of any property that came across my plate. And all throughout that journey, I had Bitcoin in the background as sort of this really interesting technology that definitely appealed to my more libertarian sensibilities and just seemed really interesting. And it kept on growing and growing. And a very small allocation when I was in school turned into, probably way more money than a college student should have access to. And I watched it go up and I watched it go down. And I was like, very interesting. Spent a few years where I didn't pay much attention to it. And then on what I would call now a fateful day, my wife forwarded me an email newsletter and said, I think you should maybe look back into this stuff. And that started the journey of us liquidating our rental real estate portfolio for Bitcoin and then Bitcoin miners. And the reason for getting into mining specifically was, I wanted to own Bitcoin, but I didn't want to leave the idea of passive cash flow. And rental real estate certainly provided that, albeit wasn't quite passive most of the time because I, like many people, had tenants that made it not passive. And there's just always something to manage. But I love the idea of plugging in a computer and that computer just connecting to a network and doing work for you 24/7 and getting you money denominated in Bitcoin. And so that was the journey into mining. I had some misadventures and some losses and worked with a couple partners that didn't treat me well. And from that experience, built my company so that we could offer the service that I wished had existed when I got in.
Yeah, and and being a true entrepreneur, and it sounds like it was in your blood and growing up and realizing that the job wasn't in your future is that sometimes you just have to solve things that you wish were out there that you couldn't find, right?
Yeah, I like the saying that your purpose lies next to the worst thing that ever happened to you. And I probably wouldn't have built this business had I not had that really rough experience when I first got into the mining space. I was really just trying to do it kind of quietly and privately and own some miners and make some passive income. And, having that blow up experience really motivated me to build something that could solve that problem for others, because my story was not unique. Actually, in fact, most of the people in my company and my leadership team have had some sort of experience like that. That's quite common in the space, that people have either been scammed or worked with unprofessional companies. So we just thought, you know what, let's raise the standard for the whole industry. There's no reason why we can't make a great opportunity of this.
Yeah, it's crazy. I mean, me being in the financial services, quote unquote, I put that in air quotes pretty, because I, like we were joking around, I consider myself a little bit of an anti-financial advisor that, yeah, you don't have to look too far to find unscrupulous type people in these industries. And it's a shame because it's like, why can't you just think broadly and positively around it and say, how can we lift up everybody? It's always one of those mind boggling things to me where people are trying to be on the greedy, sort of unproductive side of life, just
Yeah.
trying to steal from folks. It's just amazing to me.
I think the saying is that business would be easy if it weren't for the people. And that's largely true in almost anything. But that was what I found was there's no real technical reason why this shouldn't be lucrative and fun and easy and enjoyable. And it always came down to just working with the wrong people could ruin your day and ruin any kind of sense of an ROI.
Yeah, I've certainly experienced that in a whole host of ways. But again, I think some of these learnings have certainly you've used it for now to kind of pave a more positive path, right? I think these things are meant to show us things, help us learn things.
I like to call it tuition.
Yeah, it is
You
tuition,
you get
right?
to pay life tuition, you get to pay teachers tuition who can, learn with you in a positive way, or you can pay life tuition to give you an experience that you'll definitely learn from.
It's the who said that once? I think it was Alex Ramosi, like the ignorance tax sometimes. I don't know things.
Yeah.
Right? It's just like, you just guys got to pay that occasionally and you'll get it back. It's just money, right? We'll get it. But anyway, so yeah, definitely I'm with you around the real estate. We were joking around that the passive, quote unquote, passive nature, and our tax code likes to call it passive, but it's definitely not passive for anyone who's actually experienced it for long enough, right? It might work that way for a month or two, but it will quickly turn active in a heartbeat for most people. So, and for you, and I have some experience in sort of your space being an investor and unfortunately come across similar stories that you're describing where you've got a lot of sounds great, but turned out to be not what it was. And, if I'm unfortunately got burned in that. And I think that's the type of stories that get people worried about this space, right? Because they can't feel it. Like at least real estate, you can touch, you can feel. So from your lens, you're working with a lot of different types of people. How do you help people get around that, right? And sort of get more real with it when it's maybe sometimes a little bit difficult to kind of.
Yeah. It's tough for a lot of people to grok Bitcoin because it is this non-physical digital network that, at least on the surface, you can't really lay your hands on. And especially for people that aren't super tech forward, that's a little bit of a mental leap that they have to engage in and volunteer for. What I love doing and what I don't see many other companies do is I love having people out for site visits. So we'll do about a monthly site visit to our data centers here in Oregon. And the benefit of that is, one, you get to see that it's real and there is actually a company and a team that's operating this investment for you. But two, it helps you understand how the network works in a way that is really hard to get if you're just doing research online or watching a YouTube video. And to that point about people love real estate because you can lay your hands on it, it's a very visceral moment when you can touch the computer that's securing a global multi-trillion-dollar network and see that, yes, it is in fact connected to physical reality. It is having an impact, not just on a digital network, but having an impact on a community and changing the way that we use energy and all of this, that really only becomes clear as you're driving past the hydropower dam and you see the city's substation and you see these hundreds of computers that essentially fit into the form factor of a shipping container and yet use the energy of hundreds of homes in a very small form factor and do so in a way that has a real impact on a local economy. So that, I find, is a huge unlock for people and makes it not feel like this weird speculative magic internet money, but truly a part of the digital infrastructure that's running our world.
Yeah, no, that's really powerful stuff. And it's crazy. I mean, I know you see it because you're so connected into this space, but, now I think more and more people every time we turn around, leaders in the industry around finance in general are all sort of realizing that this isn't going away. This is the future, right? And it's now, right? Obviously, we don't know what it'll look like. I saw it the other day. It's funny because I took my kids there to his house when Paul Tudor Jones like, whatever, billionaire investor, hedge fund guy. And he's like saying that everyone should have it, right?
Yeah.
As a hedge against inflation, right? These sorts of things, like, it's like, it's popping up all over the place. It's like people come to the realization that this isn't going away. It isn't a fad, right?
It's a wild thing that, in the space of a year, you can go from people being scared that the government's going to ban it to the government now has a strategic stockpile of it. And in fact, the sons of the current president are involved in a Bitcoin mining company. Like, you can't write stories like that. You can't make up stories like that. It really is that quick that it's changed from, is this going to stick around and is this going to get banned, to, wow, this is the most viscerally supported thing that we currently have going right now.
Yeah, no, it is quite crazy. And to your point, you can't unsee that stuff, right? If you want to be objective about it, right? You look at that, and it seems like it's becoming even more widespread the more you kind of just look around. It doesn't take much, right?
Yeah, it's a decent signal if Larry Fink and BlackRock are getting involved in something that it's probably not going to be banned or go away anytime soon.
So for yours, like, it's similar. And we talked about when I first got into real estate, part of what I was doing, I quickly learned I didn't want to be the guy laying the hammers. And, I experienced it once and realized that a more passive manner in managing that was good. So, for you, for the model you've built, this can be pretty passive for folks, right? Who are getting into this, they see the value in it. So walk our audience a little bit through kind of what you guys do for folks. Like, what is this really?
Yeah, so the intention is for sure for it to be completely passive. We have clients who are very active in this and are always pursuing education and even building their own sites and having us help them. But for the most part, people are coming to us and they're just looking to buy a piece of equipment that generates income, that has some tax advantages, and then let that be managed completely hands off. And it takes less than 30 minutes for them to essentially set up the means of receiving their payouts and get a wallet set up and everything. And we walk people through that. But essentially, from purchase to making your daily, weekly, monthly, and annual profits, you're just watching money come in. And that's a fun experience. It's much less fun when it isn't passive and you're getting maintenance calls and you're getting all of these things that you weren't expecting. And part of the reason that we designed the service in the way that we did is because I had that experience of wanting it to be passive, both in real estate and in this industry, and not getting that and having to deal with issues and deal with upcharges and repair fees and all of these things that nobody tells you about when they're talking about the upfront sales pitch of why it's the greatest thing in the world. So I really sought to solve every pain point that I possibly could in that and make it truly hands off for the person that, in most cases, we're working with business owners and entrepreneurs and investors who are not looking for a job. They're not looking for something to learn from the ground up and really put a ton of effort into. They're really just looking to deploy capital in a space that shows promise with someone they can trust and collect income. And that's exactly how it works. And the structure of that is super flexible as well. So the basic model is you buy a machine. That machine lives in one of our data centers. We operate it, maintain it, keep it online, keep it cleaned, and do any kind of repairs that might be needed. And you're just collecting the income on a monthly basis and paying what it effectively amounts to a service fee. That is just electricity and labor and maintenance, all of these things baked into one line item. So upfront capital expenditure, operating expense, and then you get your revenues, which are Bitcoin. And that's just directly into your wallet. We don't touch it. We don't actually even have the ability to see it. We're effectively configuring a computer for you, managing that computer, and then the Bitcoin is all on your side.
Wow.
And from there, people structure it very different ways. And it's not like a GP-LP structure where we're locking up your funds for a certain amount of time and you have to depend on us to be good managers and properly allocate resources. You're truly just the owner of a piece of equipment. If you decide you want to sell that equipment, you can. If you want to form an entity and go in with people, you can absolutely do that. And that entity becomes our client. But the business model is structured in a really simple way so that you can own it in many different ways and structure it in the way that's the most advantageous, because those tax advantages are one of the key points of why people choose to do this.
Yeah, and that's what it gets into. Like, you're physically owning these miners, right? And you're just helping someone operate sort of like a business around it, right? To mine.
Yeah,
That
effectively, it's a turnkey business in a box.
so that gets into the benefit, right? Versus like if you right, if someone could say, hey, let me just buy Bitcoin, right? Why go through the process of mining it like someone else do it and you just buy Bitcoin? Like why would I do that?
Yeah, there's two main reasons. The first one is you can get more Bitcoin for the same capital expenditure. So because you're essentially getting Bitcoin at production cost and your miner is turning energy into this finished good of Bitcoin at a discount, that arbitrage over time means that with the same amount of capital up front and in those operating costs, you can end up with more Bitcoin. Usually over a 3 to 5 year period, you're ending up with 30 to 50% more Bitcoin than if you just bought it on day one. And then the other reason that people choose to do it is if you're buying Bitcoin, it's probably with after tax money. So there's no real benefit to buying Bitcoin. You can't write it off. It's an intangible asset. It doesn't have a depreciation schedule. You're just getting a digital good effectively. When you choose to go into mining, again, it's like you're buying a business. So you've got capital expenditure, which in most cases you can depreciate that capital expenditure. 40% bonus depreciation, I think, is current in 2025. You've also got operating expenses. So when you pay that management fee, that electric, labor, maintenance, cleaning, all of that stuff, that is 100% write off against any income that business produces. And so when you structure it properly, you can generate Bitcoin, generate more Bitcoin, and structure it so that you're actually offsetting some of your tax bill, especially if you're doing it in the context of an entity. So that's the main reason that people do it, especially higher net worth investors are always looking for ways to reduce their tax liability. And especially if you're already interested in the space and you're already interested in building a Bitcoin position, this can be a great way to do it and do it with cash flow.
Yeah, you're definitely spot on. It's especially when you get more successful, the tax spike continues to grow, right? And especially around business owners that they recognize the benefit of being able to hopefully have more ownership and control of what's happening, right? Obviously, they're going to be partnering with you and your organization, but having the tax benefits at least de-risk it to some degree, right? In terms of what you need to even generate out of it. Once people get that, I again, one of those things once you see it, you can't unsee it, right? It becomes just normal.
Yeah.
Right.
And that's one of the things that, like, I'm, not tax, legal, or financial advice, although I usually end up speaking to some aspect of it and then telling people to go get their own advice.
Yes.
But I can say that because we are structured the way that we are, and you truly are just the owner of a piece of equipment and paying essentially an operating expense, that gives you a lot of flexibility to tailor it to whatever your tax situation is. So we see people pursue all kinds of different structures depending on what their overall picture looks like. And that I find is just extremely powerful when you've got the agency and ability to, create your own destiny, shape your own destiny of how you want to structure something.
It's great. So for folks who are getting into it, right? Because I mean, obviously this day, and I remember, not that I need to, I have an iPhone, I'm trying to get out of it, but you get one every year, it feels like, right? For this one, like you talk about computers, obviously they're going to get outdated and, machinery. Like, how does this cycle kind of play out?
Yeah. So this could be a podcast in itself, just talking about the kind of evolution of this space, but I'll shorten it by saying that there was a lot of advance in a very short period of time for the first, call it 10 years of building Bitcoin miners. They're very simple machines. So they're not like a complex computer in which you can change many different parameters to make it more effective at a certain job. They are effectively just really powerful guessing machines. So they're doing one operation that isn't in any way a smart operation. Like, it doesn't take what we would consider thought, like you are working with when you're talking about AI models or any of these more intelligent computing processes. And so essentially what you run up against with these computers is just the limits of physics. How much power can you run across a circuit to produce an outcome, to perform an operation? And what you see is a diminishing growth curve in terms of how much more efficient you can get in that. So to put it to numbers, the first, call it 5 years of efficiency gains were on the factor of hundreds of times more efficient from year 1 to year 5. And then the last 5 years is more like a 2 to 3x across model years. So we're in that point of diminishing returns where what you're buying today is likely to be pretty relevant even into the future. That said, we already mentioned tax advantages on having physical computing equipment. That depreciation schedule is a 5-year depreciation schedule in most cases. And so by year 5, whether it's making money or not, probably makes sense for you to upgrade, because at that point you get to restart bonus depreciation, accelerated depreciation, and essentially, restart the benefits of that particular part of the investment strategy. So I would say that it makes sense to rotate about every 5 years, and you can always take it like a kind of portfolio rebalancing strategy. You can sell half of your fleet, a third of your fleet every year or two to make sure that you're always layering into the most effective efficiency level for the time.
Yeah. Yeah, definitely better than buying a new car that you won't need to use, which is often the fun advice. Yeah, just do that, depreciate the hell out of it, and even though you don't need it, this will at least continue to produce some income down the road.
Yeah, if you still want to hold it after 5 years, I mean, there's a good case to be made for these things lasting up to a decade or even more if they're in the right circumstance. It's part of why we're in Oregon, is it's a very friendly climate to these machines. They can last quite a long time because we don't have the wild temperature swings of the South. It's not super humid. There's not a lot of salty air. It's really a pretty ideal place to run a computer in terms of the quality of the environment. And so if it does last past that 5 years and you want to keep running it, you can always send it to, say, a wind farm or a solar farm where there's cheaper energy, lower operating expenses, maybe also lower uptime because that's an intermittent energy source. But there's a second life for these machines. And that's part of what we're building out as well with the business, is not just these premier hydro-powered, 98% uptime sources, but also what we would kind of jokingly call the old folks home for miners. Once they're done with their most productive years, they can live out their golden years at a sunset site.
Whoa. So you got to share more about that. So what does that mean? Like they're kind of still operating, right? Because we want them to have some purpose, right, of life, just like humans, right? We don't want to just retire and just sit in the sun and do nothing. So they still can operate in some capacity, just slightly different. So tell me more about that.
Yeah. So fundamentally, this business is about turning energy into a finished product. And you can pull two really effective levers in that. One lever is just the efficiency of the equipment. So you can run the most efficient equipment, and you do want to run the most efficient equipment in a really high uptime environment where you can, I mean, if you think about it, if you're working 80% of the time, you make 4/5 of the amount of money. So it's really important, especially when you're still trying to break even on that capital expenditure, to have the highest uptime possible and the least risk to that investment being blown up by the circumstances of the environment. So many people have experimented with, myself included, sending machines internationally into various jurisdictions where there's much cheaper energy. But unfortunately, if someone seizes your machine, or suddenly mining is made illegal in that country, or something else happens that's outside of your control before you've broken even, doesn't matter how cheap your energy is, you've lost your investment capital. So you want to make sure those first few years are extremely stable, extremely high uptime, and that you can break even on that investment and then make your return. And then everything after that, the first tranche in an oil deal, is just sort of bonus. Like, you really expect to make your money in that early part of the curve, and everything after that is just gravy. And you could take it or leave it. Doesn't really make or break the investment, but it's great if it continues to produce for years and years. And so in mining specifically, if you've got an older machine, those older machines are going to seek the cheapest energy, whether it's up for 80% of the time or 50% of the time or 30% of the time. As long as you can run it sometimes and make a margin on that operation, you will likely want to send that machine somewhere that it can keep on running, even if it's at a reduced capacity, so you can keep cash flowing. So there's many different circumstances, and this is a way deeper conversation than we probably have time for, but energy gets wasted all over the world. A kind of surprising stat to most people would be the third largest block of energy in the world is the wasted energy by the US. So there's the amount of energy that the US uses, there's the amount of energy that China uses, and then there's the energy that the US wastes. And so just putting to work energy that otherwise goes to waste is a huge, not only economic benefit for people that are mining, but also makes the entire energy system, which is essentially the foundation of how we all operate in modern society, more efficient as a whole. So, there's the investment case for mining. Obviously, it's a great way to make money in a very promising industry. But part of the mission, part of the really cool impact that we get to have as miners is that we're putting to work resources that otherwise go to waste and making a very critical system more efficient and work better for humanity.
That's great. As you're describing that in my head, I'm like, God, there's probably so many other resources that we just waste and we're not even paying attention to it. And, even some of the basic stuff like food, how much food gets wasted in this country and people are starving across the world. Well, in America too, like things like that. So you're at least putting to use like that wasted energy and still make it productive, right? You're paying attention to that.
Yeah. The funny thing with food waste too is food has energy content as well. I mean, you can compost it. In many cases, a lot of food waste will end up in landfills. Landfills are actually huge energy producers. And many times that energy at landfills is not used at all. So it's just being turned into methane, which is very energy dense, but is also a greenhouse gas. And if you don't do anything with it, it's just getting vented into the atmosphere or combusted on site in some cases. And so, cool little side story is that a lot of Bitcoin miners are setting up at landfills and making use of otherwise pollutive methane. And essentially, it's a for-profit environmental remediation effort because they're removing a gas that's 20 to 80 times worse than CO2 in terms of its greenhouse effect. So, just another example of something that's poorly understood and not really seen by most of society, but is helped by this process.
Wow. Yeah, that's fascinating. So we've talked a little bit about it before we started recording, which is it's interesting who is gravitating to like your model, right? This sort of turnkey sort of approach, and even just Bitcoin in general. And you would assume it's mostly the younger folks, but you're experiencing something a little different, right? So who are the people who are sort of adopting kind of the model and working with you?
Yeah, I was really surprised getting into this. I thought that most of the people who would want what we had to offer would be other kind of tech forward, 20s to 40s individuals who just wanted someone to help them, but already were pretty savvy in the space. And what I was surprised to find is that many of the people that we work with are over 50 at or nearing retirement, which retirement's a funny thing, where retirement becomes a word that's more in your vocabulary, whatever that looks like for you. And many times they are setting up their first Bitcoin wallet with us. Surprisingly, we've gotten very good at this now, and we've really started to cater a lot of educational resources for this kind of person. But I was surprised at first to find that we were people's first exposure to Bitcoin. And in many cases, it was becoming a meaningful part of their portfolio, and they were in the later stage of their career, or even not even working and just full-time investors, and really looking at this as a meaningful way for them to get a position in Bitcoin and get it in a way that cash flows. So that was a big surprise to me, but it's also really encouraging because that means that this isn't just reserved for the tech-savvy investor who's quite young and understands how many of these things work. It really is that easy that, we have clients that are nearing their 80s at this point who can barely work their own email and yet are mining Bitcoin with us.
That's amazing. And we know that with kind of what's happened in our economy and sort of the wealth divide that is continuing on, and there's going to be this massive wealth transfer. And, people are living longer. So you have all these sort of unique sort of things going on. And people, are also thinking about future generations and legacy planning. And so these are all things, if you believe this is part of the future, it's almost incumbent upon you to at least consider it, right? That's kind of how I view it. Because if you think it has, at least for maybe not all your portfolio, some people are a little obviously on the other end of the spectrum, like you may be there too, but at least for something, right? I got to believe.
It's one of those things where I think the most dangerous allocation is zero. And I'm not expecting everybody to be like me, where it's, 90+% of your portfolio. Obviously, this is my active business. I have a material edge in this space, and I have a deep conviction that's informed by thousands of hours of research and knocking my head against walls. So I have a good reason to have a really high allocation. But I really think even for people who are in their later years and are risk averse, it's really something you should consider having at least 1 to 5% of your portfolio in, whether it's just holding Bitcoin or getting into mining. I think that you miss a really important change in how the entire investment landscape works if you aren't in some way exposed to this. And part of the reason for that is just that we touch a lot of really crazy trends that are being shaped in front of us as we speak. Mining specifically, we're touching the energy world, we're touching the financial world, we're touching data center infrastructure. 3 things that are in front of our eyes being reinvented and reshaped. And if you don't have some kind of exposure to them, then unfortunately the rest of your portfolio might be misinformed as well. So even if you're only getting some to have exposure to the learning, I think it's worthwhile. And, if you follow someone like me, I consider anything other than being in this space a little bit more risky than being exposed to this.
Right. And to that point, I love your initial thought at the beginning of this is to actually go experience some of it, right? Because everything, to your point, when you think of a digital thing, it just, some people have trouble connecting the dots with it, and it just is a little too scary or risky. But just like anything, I watched my son start driving for the first time, and obviously we're in terror of watching this happen. But you see the slow but sure sort of confidence that builds as he starts experiencing, making, successful trips and seeing it. Like, this is kind of it. Like, you've got to get closer and learn about it. And I'm sure the confidence gains and the feeling of riskiness kind of is reduced, right? That's what happens in life.
The most dangerous position you can have in something important is being exposed and not understanding why. And exactly to your point with helping one of your children start driving is if you don't see the importance of them being able to drive far into the future, then that initial scare of them running a stop sign or almost killing you might encourage you to abandon that journey and say, you know what, maybe driving isn't for you.
Right, you're right.
And if you're in a place, other than a major metro, it can be really important to have a way to get around under your own steam. And similar in the investment world, many of the best performing assets in history had periods of crazy volatility, Bitcoin included. And if you were not convicted and not building an understanding in that really helped you have a good reason for riding through the hard times, you might have missed the most upside. So I heavily encourage people, and it's part of why we focus so much on education, to really learn about what you own, whether it's Bitcoin mining or anything else in your portfolio. If you don't understand the opportunity, if you don't understand why you hold it, you're likely to get shaken out at the worst time.
No, spot on. I don't know if it's Kiyosaki said, whatever. It's not the investment that makes it risky; it's the investor, right? Because you don't know what you're in or why, and you hit it spot on, Beau. Because that's it. You can be in anything if you understand it well enough. You'll have an edge. You feel confidence in it, but unfortunately, a lot of people just kind of follow along and just kind of stay on what I call the comfort lane of what is accepted and don't explore outside, right? And I think unfortunately that's to their detriment. So for folks who are open-minded, and this is why I love what you're doing around the education part, which is helpful, right? You just expose people to it and let them learn it on their own sort of trajectory and path. And then they'll see if it's a right fit for them long term. The other thing I always think about too, and I love to get your thoughts on this from again, I'll allow you to use your crystal ball and shake the 8 ball. I'm older than you. I used to shake
my crystal ball's broken today. I'm sorry.
Yeah. I used to use the 8 ball. It would tell you everything, like to shake the 8 ball. But what I think around investing in finance, a lot of people are very short term thinkers, unfortunately, and the news is help perpetuate that. Like, I got to watch everything in the market, what's happening on a daily basis. And it just is mind numbing. And it's really a dangerous thing. Yeah. But, the people that I know that are the most successful, they are thinking long term. yeah, they're acting short term, but they think long term about things. And so, from your lens, thinking about Bitcoin and where this is all going, like, how do you see this evolving from your lens? I mean, I know you are in your business model now, but kind of what does it look like to you?
I see this as probably one of the most important transformations in the financial landscape that has ever existed, if not the most important. It's truly like an invention or discovery of money like civilization has never seen. And I still think that we're really early in that. And that sounds funny if you saw it in 2011 and it was like under $1 and now it's at $100,000 a coin. But the reality is it's a global asset and it is less than 0.2% of global assets. And if all you think that it is some kind of replacement or analog for gold, it still has 10x to go in terms of how big it could be. And I'm of the opinion that it can eat up a much larger share of global assets than that. So Bitcoin right now is a $2 trillion asset. Gold is a $20 trillion asset, give or take. But, real estate is 300 or 400 trillion, depending on how you count it. And I'm of the opinion that Bitcoin could be a replacement to the way that most people think of real estate as a store of value, because real estate's just been the best vehicle for many people for many years in the absence of something that did better and had better characteristics in terms of how it was designed. So that's a big statement, especially if people have most of their net worth in real estate. But, that was where I came from, was thinking that, okay, this is the most well-established vehicle for building and maintaining wealth that has been used for centuries, if not thousands of years, and is well accepted. And what could possibly upend that? And the answer for me was a perfectly finite asset that is thermodynamically sound, meaning it doesn't lose energy. And it's essentially just a battery of wealth that will continue to store more and more of the world's economic energy ad infinitum, forever into the future, doesn't degrade, can't be killed, and has all of these characteristics that nobody's ever seen in a technology. So to zoom back out to what you actually asked me, over the short term, who knows? There's never any being able to tell what price action is going to look like. I can tell you that over any 4-year cycle, holding Bitcoin has been a good move. And if you can ride through a 4-year cycle, you're likely to be rewarded. Over any 10-year period, I think you'll be very richly rewarded. And the best mindset that I could give to anybody who doesn't know how to think about this is there's a difference between trading, investing, and saving. And trading is over a very short time frame, trying to make some kind of gain. Investing still has what I would consider a limited time frame where you're still looking at an exit path for an investment. Saving really imparts the mental framework of, this is my savings. Like I'm letting this sit somewhere. I'm not trying to sell it for something. I'm not trying to trade into something else. I am really storing my economic energy into this vehicle for as far into the future as I can see, because I see it as the greatest guard to my wealth over the long term. And that is, in my opinion, the right way to think about Bitcoin.
Wow. It's funny, and you mentioned gold, and almost 90-year-old mother calls me up the other day, and she's like, Tom, do you still have that gold chain that I gave you back when you were younger? Do you know how much gold is worth right now? But here it is, like there might be a day and time when everyone's thinking of it in the same way, right? This is a store of value, right? Mm-hmm. Obviously, in potentially currency and however it's being used, but it's thought of that way. This is somebody who grew up in Thailand, he's almost 90 years old and still talking about it in that sort of fashion. There could be a day in the future when that's just the normal conversation.
Yeah, and I think it's only because it's so young that's not widely accepted. I mean, gold has had a chance to enter the minds of investors and savers for thousands of years as a way of storing economic energy. Bitcoin is freshly 15 years old, so it's in the middle of high school. Nobody's really thinking of it as a true economic threat. it's showing promise. It's showing the promise like a younger athlete who's maybe qualifying for some of the better tier one schools, but it's still very early in its career. And that's really how I would think of it, is it's got all of the qualities of a really standout asset, and it showed incredible early performance. But most of the largest pools of capital in the world still have little or no allocation to it and don't consider it a meaningful part of their portfolio.
Let me ask you this, Bo, like for folks who are maybe just kind of stepping into it, obviously you've got a lot of education, which we will point to I assume it's mostly on your website. Yeah, I know you do podcasts and such around this, right? So, but for folks maybe or listening to, or even considering it, like what's a few things that you just say, you wish everyone knew this about Bitcoin and the mining in general that is probably misunderstood by the vast majority of people?
There's so much to unpack there, so I'll try to stay focused. For Bitcoin itself, I wish people understood what I just told you, which is that this is not a get rich quick scheme. It's perfect savings technology.
Yep.
And if you treat it as such, you are likely to be very richly rewarded over the long term and forget about the short term. The second thing is we don't really get this in America because we live in a relatively free financial system where most people have access, although millions of people still don't have access to a bank account. A large portion of the world population has no access to financial services at all. And so apart from being a savings vehicle or a wealth building vehicle, this is actually a financial freedom tool. And that's arguably the most important thing that this does, is it gives access to people who do not have fair governments, do not have representative governments, do not have open financial systems, a way to access, store, and control their own money and their own destiny. So that's, on the humanitarian side, something that's super worth looking into. If you want to learn more about that, Alex Gladstein, the Human Rights Foundation, are a great resource for understanding not just the financial impact of this technology, but the humanitarian impact. And the third thing I'll say about mining specifically is that mining over and over has been characterized as this flagrant waste of energy that contributes no value to the world. And what I learned and what got me to spend my time, energy, and focus on this industry was that, in fact, it's perhaps the most sustainable, most positive environmental force that we have in the world that's still little known, poorly applied, or not very widely applied, and is likely to reshape the way that we interact with energy and pollutants in the environment, and is so poorly understood, but has this potential to be the most impactful force in the world of energy abundance. And for people that don't understand why that's important, energy abundance pretty much means abundance in everything else. Energy is the foundational commodity that fuels our life. Money is arguably the most important technology for cooperation, and energy is the most important technology for production and productivity. So those three things, if you can get on board with those, if you still have any arguments that Bitcoin isn't important or isn't a good thing for the world, I didn't do my job.
That was well put. Bo, this has been great. So obviously, if folks who are interested in kind of learning more about you and Abundant Minds, how best to get in touch with you guys? I assume your website, you guys I went there, plenty of information there, and setting up maybe a call just to learn more about whether this opportunity is good for them.
Yeah, so the website is a great place to get in touch with us directly. You can book a call with a member of my team from the website. That's abundantminds.com. We also have a lot of educational content on our YouTube channel. So on YouTube and pretty much any social network, if you just type in Abundant Minds, MINES, you'll be able to find us. For people that are still evaluating, mining as a potential option, if you just send us a message to one of our social media channels, Instagram, X, with the word diligence. You asked a lot of great questions about how this works, Tom, but there's a whole host of things that whether you work with us or you work with somebody else, you should understand about this industry. And so we'll send you a free list of all the questions you should be asking someone that you're looking at working with in the hosting space if you just send us that word diligence. But yeah, we've got a podcast, long form videos, short form videos, and we're putting out content every day to help people understand this industry. And hopefully it's valuable. We put a lot of work into it.
That's awesome. Great stuff, man. You're doing your part. So I really appreciate, listen, I was looking forward to this conversation. Yeah, and you really were great, provide such wonderful insight around this space that's, I think, way misunderstood. And hopefully you made it a little less scary for people to kind of take the next step. And that's all we can all do for people. So thanks, Beau, for your time. Hopefully we'll eventually get the chance to come see you in your site some point and kind of see your operation. I think that would be a fun excursion for me. So maybe I'll put that on my calendar.
I would love it. Yeah, please come out. We actually have there's a conference. I'm not sure if the dates work for you, but there's a conference in Portland August 1st, and then we'll do a site visit on August 2nd. It's called Bitcoin is for Everyone. Probably be 1,000 people, maybe a little bit less. And that'll be in Portland, which is about 30 minutes from our site. And we'll be sponsoring the conference. So come learn about Bitcoin, hang out with people, and come see a site in one of the most beautiful parts of our country.
Wonderful. Thank you. Thank you for that. So, Beau, thank you. Appreciate your time, man, and look forward to staying in touch. And who knows where this goes with. Thanks again.
Thank you, Tom. Appreciate you.
Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.